Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us today. Coming up on the show, we'll be joined by our guest co-host, Paul Harris, Portfolio Manager at Harris Douglas Asset Management. And later, our featured guest will tell us about a new social media platform, Gander. And it's a Canadian-built, values-driven social media platform that's raised $1.5 million this month. That's Penny Waldman we'll be talking to. And we want to hear from you this morning on First Call. You can reach out to us with your questions on North American and global large caps, and we'll have Paul answer as many of them as he can. Number to call, 1-855-326-6266. We will open the phone lines in about 30 minutes. Our email, of course, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you here in the BNN Bloomberg newsroom. Frontera Energy has entered into a $120 million U.S. prepayment and commercial agreement with Chevron Products. The Calgary-based company will commit to deliver a portion of its crude oil production for a period of 2 years to Chevron. Frontera said the agreement will replace an existing prepayment agreement, which expires at the end of January. Well, copper is headed for the longest winning run since 2017. The metal's December rally is being powered by the prospect of more stress in the supply chain. Traders have been rushing metal to the U.S. in anticipation of potential tariffs, tightening the market for the rest of the world. Futures have rallied by more than 40% this year, setting up the biggest annual advance since 2009. And now our top line story following President Donald Trump's campaign to end the war in Ukraine. The tensions are shifting as peace talks between Russia and Ukraine hit new obstacles, with Putin signaling changes to his negotiating stance after a drone attack claim. Now, to unpack what this will mean for global markets and geopolitical tensions, let's bring in our guest co-host, Paul Harris, Portfolio Manager at Harris Douglas Asset Management. Paul, thank you as always for joining us. Happy holidays to you.
My pleasure, Roger.
I'm sure it's fun to come in here just to get a little break from friends and family and come chat with us for a bit.
Right.
There's really a lot going on. It's not just what's happening in Russia,
right,
but also we've got Venezuela, the strike that
right
happened down there, this time on land,
right,
which kind of sets a dangerous precedent. And right, what's going on in the Middle East, talk of possible strikes against Iran.
Right.
Where does this lead? Where
right,
are we going?
Well, first of all, I think with Russia and the Ukraine, I don't think Putin's really interested in any peace whatsoever. I mean, his economy is being run from basically running a war, and outside of that, the Russian economy is probably very poor. So I think that's one thing. He's really not interested, and he has a very different vision of where he wants to see Europe. So I would be really worried if I were European countries, and especially those border states, that his intent is quite clear. It always has been. I'm not sure why people sit around thinking that he wants to do something different. He is an autocrat and a liar. And so I think that the reality is that he's very interested in increasing what he considered to be, prior to the Berlin Wall coming down, all Russia. So I don't really, I don't think his intent is to do anything like that. I think that we are making big mistakes politically by not helping the Ukraine out, not letting them be a part of the EU and, part of NATO. And I think, this is partly the US's fault. And, you can blame the Europeans as well. I mean, they could use the money that they took from, that they'd frozen and to use for Ukraine, but they got worried. Russia says something and they got worried and they don't want to use that. So the reality is that we're not really helping democracy in any way or form by taking a stand here and drawing a line in the sand, right? So, and that, these are all easy things for me to say because I'm just talking about it.
5,000 miles away.
Yeah, but the reality is I think that's very clear. Like he has no intention of wanting to have peace. That's one thing. I mean, I think that the problem from a greater perspective in the U.S., there's really no sense of foreign policy, which I think is the difficult part for people investing, and maybe that's why they've just kind of not taken notice of this stuff. There's really no clear what is our foreign policy, how do we execute that foreign policy in the U.S. Right? It's been the Trump administration really doesn't seem to have a vision of a foreign policy. It's very ad hoc. And I think that's, it can cause short-term volatility a great deal. But I think people have sort of said, oh, well, this is just the way it is, and he's crazy, or this is the way foreign policy is in the United States today. And maybe they've kind of put that aside and not let it influence as much the stock market. And they tend to be kind of very, like Venezuela, I mean, it doesn't affect the economy that much. I mean, although that, going on land and all that stuff is a bigger issue, as you mentioned, it's not a big country in a way that you're attacking some other part of the world. Iran, Iran is very in a very awkward situation, right? So, I think these are all basically coming around because there is no real foreign policy objectives. Where do we want to go with foreign policy? How does the U.S. look at foreign policy? Given what we think about our allies and all that stuff, there's no consistency there.
What might trigger the markets from Washington then? If they suddenly had a foreign policy, or? Well,
I mean, I think that if you saw kind of a full-out war against Russia or something like that, that would be much more, or China, attacking Taiwan or something like that. I think China attacking Taiwan would have a much more bigger impact on kind of the global economy simply because of semiconductors and stuff like that. I think
and we can throw that into the mix because China was apparently
doing a lot of
blockades and war games off the coast.
Yeah, and I think I think the problem is that with China, we've actually, the U.S. is, so he put a lot of tariffs on there, and then because he thought he had a lot of leverage against China, but he realized they have a lot more leverage against him, against the United States, and so he's brought those all down. And he's done a lot of things that have actually. China's basically won that war, as far as I'm concerned, right? They've really have dominated the U.S. when it comes to this tariff issue and all this stuff. So they feel empowered in many ways, right? And you've not got your allies together to kind of, work together to deal with China in many ways. You're just trying to deal with it by yourself, which I don't think works very well.
Possible. Not with China right now.
Yeah, I think you've empowered China. They've got a much longer-term view of the world, the longer-term view of how they look at their nation and their country, and so they can take the long road, right? And the U.S. is playing a short game, I think, and that's really the bad part of it. Now, if you had a stronger foreign policy vision, then maybe it would be a lot easier to deal with China. But you've given them everything they wanted, and they haven't given up anything.
And we're going to talk more about China in a couple of minutes. But for now, we're going to head to a break, and we'll take a look at the markets before the bell and dig into the disconnect between consumer confidence and record high markets. That's ahead. See how things are shaping up on the markets. We'll start with the U.S. futures after 2 down days. It's kind of flat right now. They're awaiting the Fed's December meeting minutes, and you can see a virtual wash across the board right now. And the major Asian markets, similar situation. A couple of ups, one down. You can see the Nikkei up by 0.37, Hang Seng up by 0.86, and the CSI 300 up by 0.26. Again, they're waiting those minutes from the Fed. Moving over to Europe, year-end low volume trading along with metal and commodities bouncing back, and bank strength raising the markets. You can see the FTSE 100 up by nearly a half point. CAC 40, similar situation, and the German DAX up by 0.65. Looking at the TSX, it finished the day down again, off from its record highs, but still, of course, up for the year. Gold and silver prompting profit-taking in precious metals miners, and there was a retreat in commodities. Taking a look at some of the winners and losers from yesterday. Terravis Industries up 3.35%. Tech up by 2.5% roughly. Perpetual Resources down 6.88%. And Bitfarms off by 7.65%. And this is what everybody's talking about, of course. Gold, silver, copper, all in or hovering around record territory. Bit of a retreat from gold, but it's up again today, 1.69%. Look at silver's bounce back, up over $76 an ounce, up 8% right now. And copper also bouncing back. It's up more than 3%. quick look at oil. You can see Western Canadian Select was off yesterday by 0.73 down to 44.61. And what's WTI doing right now? It is up by about a half point, 58.36 right now. Well, stocks are struggling for direction as the year winds down, and consumer confidence is near record lows despite a strong economy and markets. Let's bring back our guest co-host, Paul Harris of Harris Douglas Asset Management, to break down what seems like a disconnect on, this has been a bit of a topsy-turvy year in general, right?
Yeah.
Our Santa Claus rally, it looked like we were going to head into one, then all of a sudden disappeared.
Right.
September didn't go down.
Yeah. So I mean, I think it's kind of a this dichotomy that you're having, where the stock market's making new highs, commodities are making new highs, the economy looks very strong given all the issues with tariffs, and then you have consumer sentiment being so negative. Mm-hmm. And if you look at the Michigan consumer sentiment number, it's kind of just collapsed, right? So I think the issue is, why are you seeing these two things? And I guess part of the reason is that you have this kind of economy that's very, I think K-shaped is what people like to call it, where the lower half of the economy, where people are really, really struggling because they don't have kind of the assets that you see from investment assets. Mm-hmm. So the higher wealthier people in the United States and in Canada, et cetera, are certainly have a lot of wealth because a lot of them are invested either in the stock market or some other asset class that's done incredibly well. So they have a lot of money to continue to grow. And then also you've seen with the bill that passed through Congress, which takes effect really in January, where you get a lot of tax breaks at the high level. Mm-hmm. But at the lower end, you don't get that, right? So at the lower end on that thing, they've taken back on Medicaid, they've taken back on Obamacare, and so you're seeing this kind of economy where people are. There was a great article in the New York Times we were talking about during the break, where they were talking about how in Connecticut people are lining up to buy $200,000 watches, but the other lineup in another part of Connecticut is to food, right? Yeah. So there's this kind of weird sensation that we should be doing incredibly well, but that's not happening. Unemployment continues to go higher. Looking for jobs are becoming more difficult, and the job. And so I think that's adding an anxiety to a lot of people. And when they do these kind of surveys, you're seeing that there's a part of the economy that's actually not doing well, doing very well at all, because they're not in the equity market, they're not in other asset classes.
And that must add to their stress, because they're being told the economy is doing great.
Right.
The markets are going gangbusters, breaking records, and buying $200,000 watches, but they're sitting there going, "What's going on? Why aren't you part of it?"
And they're ultimately, the issue with people who are in lower incomes, they spend more of their money on needed things like food, et cetera, right? So, So they're feeling the brunt of higher costs and all these things, where someone who's really wealthy doesn't even notice that, right? Oh, you're paying more for eggs. Well, I don't care if you're wealthy, right? But if that's what you have to do if you're in the lower income bracket, that hurts you a lot because you have less disposable income then, right? So I think that's what's happening. It is a kind of weird sense when you look at it, you go, wow, everybody should be doing well, but there's a large part of the economy that's not doing well, and I think that, and so that leads to a lot of other things, social issues, but political, how people think politically, and I think you saw that with some of the elections you saw in the second half of the latter part of the year, where Democrats began to win a lot of the elections because the promise of lower inflation, the promise that I'm going to be better off, is not really happening, and that Trump was supposed to destroy the elites, but people, I think, starting to see him as someone who is elite. Right? And the other thing, which is quite fascinating, I think that, and I remember listening to this on somebody talking about this, and they looked at on Google, you can look at certain words that are used constantly. And prior in the 1950s and 60s and 70s, and even the 80s, people always used positive words about the world and the economy. And since then, it's all been negative words are used, right? So there's a lot of pessimism in how we speak even, which makes it much more, this is feeling that there's an anxiety, there's a difficulty in the world.
So what happens with a K-shaped economy right now? How does it balance out? Does it suddenly snap and balance out, or does it keep going, do you think?
I think the problem is that given the way sort of that bill and all that stuff, the lower income people are going to suffer more in the next year than higher income people, simply because the tax breaks they get, et cetera. So, I mean, unless you can bring down inflation and people will have a better view of the economy, I think, in the end, it's about how you feel individually, right? Mm-hmm. It's easy to say, well, look at, and the administration does this, look at GDP's at 4.3 or whatever the number came out, all that stuff. But you as an individual don't feel that way. It doesn't matter what GDP says. People don't care about GDP. They care about how much they pay for eggs, how much they're getting paid at their job. Are they losing their job? Those are the things that they care about. And that is what I think Trump tapped into to win, right? Okay. And so, but I think that's dissipating.
All right. Well,
or fraying, I guess, is the better word around.
All right. We'll have to leave it there. We could keep talking about this for probably the rest of the show. But when we come back, Paul's going to tell us why we need to break China's stranglehold on rare earth minerals. That's ahead. China has dominated rare earth production and processing, but can Canada and its allies break that grip and build a more secure, sustainable supply chain? For more on this, we're back with Paul Harris of Harris Douglas Asset Management. And Paul, you have a real concern with this. That China dominates, dominates right now. Yeah.
So they produce 60% of all rare earths, and they process 90% of all rare earths. Now, part of the reason why we don't so first of all, rare earths is a misnomer. It's not rare. It's all over the place. There's certain parts of it that have a lot more kind of rare earth minerals, but you can get the rare earths, and we have lots of it too. Mm-hmm. So that's not the issue. It's not like, copper, you have to find it in a certain spot, or gold or something like that. So there's a vast amount of it. That's the first thing. China 15 years ago felt that this was going to be really important, and they developed supply chains around that. So they not only developed a source of getting the rare earth, they developed processes. But one of the problems is, and why it's very much more difficult for North Americans or even Europeans to do it, is that it's very pollutive, mm-hmm. right? We have very strong environmental laws. China doesn't have that. It's a lot easier to process stuff there and bring it here. And so that's one of the issues. So I think that it is a stranglehold, and that's why, in the long run, outside of not buying, American soybeans, they basically said, we're not going to give you any rare earth minerals. And so it's used in everything, technology-wise, right? So that's the first thing. So how do you stop a stranglehold? And China could basically say, I'm not going to sell you any of this stuff, right? Mm-hmm. And we're totally in trouble. So I think what we should be doing, outside of Mr. Carney wanting to build pipelines and all stuff, infrastructure across this country, I think those are wonderful things. I think, we should get together with our allies and build a rare earth, develop rare earth for ourselves from a context of all our allies. So we are not relying on China. It doesn't mean we don't trade with China. It doesn't mean any of those things. It's just that we can develop our own supply chain. And the way I think you do that is to bring in your allies and work together with them. Not only you can set up a fund, because it is very polluted. So set up a fund that deals with the pollution that gets caused by all this stuff. That's one thing. Set up a fund to deal with work on figuring out how to make these processes less pollutive and more environmentally friendly, or even look at how you can use other minerals as well. Mm-hmm. So there's a lot of things we can do. It takes a lot of time, don't get me, but we need our allies to be able to, people who are like-minded to, and I don't mean it in a bad way. China saw this as a issue many, many years ago, and they did the right thing.
Yeah, they reacted.
Right.
Absolutely.
And so now they have this ability to say, well, I'm not going to sell it to you. That's their choice. But I think this happened to Japan, and when China shut down selling rare earths to Japan realized that they had to go and find other sources of supply, and they did that, right? So I think we have, it's a necessity, it's an important it's important as we become more, as technology moves along, that we need these metals and minerals, and so we should be able to spend the time to figure out how to do it ourselves and develop a different supply chain.
Do you think we'd have the political stomach for it, though, to start building these processing facilities?
Well, I think
especially at the start, because they are going to be dirty and nasty. And
yeah. So, but I think if you put in place the necessary environmental, like a fund that deals with, dealing with the tailings or whatever environmental issues that they have, then it's fine. If you let companies just do what they want without government support, and you can't do this without government support, do what they want, then you're going to have this problem. But if you can create a fund that says, okay, we're going to be processing the stuff. This is the problems environmentally it's going to cause. We're going to be able to help clean all that up. I think you'll at least there's a method to doing all this stuff, which will help, right? Because you're just going to let China do it anyways, otherwise, because it's a lot, or some other country that doesn't care about the environment as much as we do in Europe and North America. But it clearly is a choke point for the economy, and it will get worse, not better. Like that, it's just going to get worse, right?
Do you see us, developing the Ring of Fire? I mean, we've talked about it for decades. Might this be the impetus?
Yeah, this should be the impetus to go and do those sort of thing, right? And you can, I'm not, it doesn't have to be just done by Canada. We can bring in our allies. We can bring in a lot of other people that obviously have the same problem that we do, right? And need all these metals. So I think we can actually work together with our allies to build a supply chain that is equivalent to China's, right? Maybe it will never be, like, one of the issues that you will always have is that they will always be able to produce this a lot cheaper.
Yeah.
And so but that's okay, because if we're more expensive and they say we're not going to sell you anything, companies will adjust and have to use other sources, and that's fine. They'll have to pay more and products will go up, but at least you're not stuck in the situation where
beholden to them.
Yeah.
Okay.
With a lot of other things as well, right? So.
Well, we learned that with medicine.
Yeah.
When big pharmacy, when we realized everything was manufactured offshore. We have to take a break again right now, but more coming up. Still ahead, we'll sit down with the co-founder and CEO of Gander Social, a new Canadian-built social media platform. And our phone lines will open soon for our first call segment, 1-855-326-6266. You can send us an email, firstcall@bellmedia.ca. Silver has recovered some of its losses after its biggest one-day drop in more than 5 years. The metal climbed above 74 US an ounce today, following a 9% slide in the previous session. Gold also edged up after its steepest drop in 2 months. Despite the pullback, gold and silver remain on track for their best annual performances since 1979. Copper is headed for the longest winning run since 2017. The metal's December rally is being powered by the prospect of more stress in the supply chain. Traders have been rushing metal to the U.S. in anticipation of potential tariffs tightening the market for the rest of the world. Futures have rallied by more than 40% this year, setting up the biggest annual advance since 2009. Frontera Energy has entered into a $120 million prepayment and commercial agreement with Chevron. The Calgary-based company will commit to deliver a portion of its crude oil production for 2 years to Chevron. Frontera says the agreement will replace an existing prepayment agreement, which expires at the end of January. And looking at the markets, they are flat right now as we await the Fed's minutes coming out later today. Well, 2025 for Canadian sports fans was a year of historic wins, deep playoff runs, and national pride. John Venevali-Rao recaps this memorable year.
Whether it was on the ice or the baseball diamond, this year's biggest games all seem to involve a Canadian team taking on an American rival in a year where geopolitics added to the drama. And nowhere was that more on display than at the Four Nations Cup in February. Can you see? Ahead of a Canada-US game, fans booed the Star-Spangled Banner. It all came amid Donald Trump's tariff threats and involving teams that are longtime rivals.
We're going to dropped the gloves right away.
A fight broke out moments after the puck was dropped, and then another and another. 3 fights in the first 9 seconds of the game, which Team USA would go on to win. The two teams facing off again in the final. And in overtime, Team Canada coming out on top. A win celebrated across the country.
They were always going to get it done. I had no doubt in my mind.
But just a few months later, another Canadian team would try for an even bigger feat to bring the Stanley Cup back to Canada for the first time since 1993. The Oilers besting the Golden Knights to go to the Western Conference Finals. And then advancing to play the Florida Panthers for the Cup for the second year in a row. Fans around the nation getting behind them.
Out in front, score!
The Oilers winning Game 1, but Florida tied it up in double overtime in Game 2. Stressed out Oilers fans posting images of their high heart rates while watching. And in the end, the Oilers lost the series in Game 6. The Panthers, Stanley Cup champs once again.
Obviously, we're disappointed with the result. It's not what we wanted.
Another Canadian team that started to get attention around that time was the Blue Jays, who'd finished dead last in their division the year before, but started to rack up the wins, and by July were on top of the American League East.
And a drive to deep left field.
And on the last day of the regular season, winning their division. Something the Jays hadn't done in a decade. In the playoffs, they first faced the Yankees.
Deep left field.
The Jays winning in 4 and spawning this viral moment.
The Yankees lose.
Up next, the Mariners. A battle that saw thousands of Canadians cross the border to cheer on the Jays in Seattle, where leadoff batter George Springer was hit by a pitch in Game 5. As he hobbled off the field, some Mariners fans were heard cheering.
And a swing and a fly ball.
But then in Game 7, the Jays trailing 3-1, it was Springer who crushed a 3-run homer, the Springer Dinger, that led the Jays to the World Series for the first time since 1993. This, the reaction on the streets of Toronto.
This is absolutely monumental. We needed this, Canada. We needed this.
The Jays seen as the David to the Goliath LA Dodgers, who were seeking back-to-back championships with the help of superstar Shohei Ohtani, a series that had it all.
To the bottom of the 15th.
From a nearly 7-hour game that lasted a whopping 18 innings.
It's grounded to second.
To an epic finale, Game 7, considered one of the best baseball games of all time, that went 11 innings. And saw the Jays several times come within inches of winning it all. But in the end, the Dodgers came out on top. For Jays fans, a crushing defeat, but hoping the team will make a return to the World Series in 2026. John Benavalli-Rao, CTV News, Toronto.
Oh, I didn't want to see that again. Still ahead, today's market drivers with Bloomberg's Divya Balji, and our phone lines are open. Paul Harris taking your questions on North American and global large caps. Call us at 1-855-326-6266. You can email us, first call at bellmedia.ca. Okay, for a look at some early market movers, we are joined now by Bloomberg's Divya Balji. She is managing editor for breaking news in the Americas. Divya, thank you as always for joining us. Off the top, Tesla publishing some interesting information on their website.
Yeah, a little bit unusual here. I mean, they usually have these estimates that they have for quarterly deliveries. They just never post it on their website. This time around, they are actually doing that. So in terms of these cars that they are selling, that they are delivering for the quarter, that number that they are providing is not looking so great. It's not so great to the point where it's actually coming in below the consensus that even Bloomberg has. That number is looking to be about 422 to 23,000 400,000 in terms of cars. What we are seeing on our end is about 445,000. So a bit of a drop. If you look at it in terms of percentages, the number that Tesla's putting out there is about a 15% decline year over year. What we have is a 10% decline. Again, a little bit of an unusual situation that they are posting it. Are they trying to set this up so that investors are aware of what they are seeing out there in terms of estimates that are available? I think it's maybe setting up the market to just be a bit more cautious. There's just today and tomorrow left to the end of the quarter. So clearly they already know where their deliveries are and what their numbers are going to be like. And obviously we will find out in the new year what that quarterly number exactly is. But still a little bit of a setting up of market expectations there, it looks like.
Okay, and Meta is going to buy Manus, is that how you pronounce it, an AI agent?
Yeah, I think what's interesting with this deal is I think everyone expects Meta to be investing in AI. They've been talking about it for a long time. We've seen it in their capex and their quarterly results as well. What's interesting here more so than the investment itself or the purchase itself, which people are pricing at about $2 billion, is the fact that this is an Asian tech company. It's a Singapore-based company that's very, very popular as an AI company, came in on the back of DeepSeek, but it does have a lot of backing from the Chinese. Tencent is one of the backers of this company as well. Meta has said that it is buying out all of these investors, so there won't actually be a Chinese touch to it. But still, a big deal like this, particularly in artificial intelligence, could be raising eyebrows in Washington. It'll be interesting to see if, on the U.S. politics side, if this comes up as an issue down the road as well.
Okay, I'm sure there'll be some scrutiny on that. Divya, thank you as always for joining us. Bloomberg's Divya Balji, she is the managing editor for Breaking News in the Americas. Still ahead, we'll sit down with the co-founder and CEO of Gander Social, a new Canadian-built social media platform. Gander Social, a Canadian-built, values-driven social media platform, raised $1.5 million this month, and it's moving toward a $2.5 million maximum offering that will be available until the end of January. Here to talk about the Canadian... we were hoping to have Ben Waldman, but we've just lost him. We're going to try and reconnect with him, but let's move on to notable calls for right now, and when we get Ben on here, we'll have him come right in. So some of the notable calls we want to talk about and analyst recommendations. We'll start off with Digital Bridge. It's received 2 new analyst ratings this morning. The global digital infrastructure investment firm has been cut to sector perform at RBC with a price target of US $16. TD Cowen has also cut their rating from buy to hold with a price target the same, 16 US. This comes on the back of yesterday's SoftBank acquisition announcement. As far as initiations go, GF Securities has initiated coverage of Alphabet with a buy rating and a price target of $396.92 US. Okay, let's get back to Gander. It is a Canadian-built, values-driven social media platform. It had raised $1.5 million this month and hoping to get to $2.5 million for the maximum offering by the end of January. And here to talk about it is the co-founder and CEO, Ben Waldman. Ben, thanks for joining us. Technology sometimes, eh?
Yeah, sorry. Apparently the connection, I don't know if it's the ice storms or what, but yeah, good morning to you.
Okay, so I mean, the question is, does Canada need a new social media app?
So I'm not sure anybody needs new social media if it's going to be the same as it's always been. And I think that's really what our aim is here, is to do something different, move away from the manipulation that has driven social media over the last decade, and deliver something that's new and doesn't, use people as the product.
And how are you going to do that? What's going to make you different?
So first of all, one of the things we're doing is we're a small company. You saw what we've raised so far. We're at 1.7 million right now. That is not Facebook money. So what we've got to do is we've got to be scrappy about it. And so rather than try to fight bots and trolls through AI and a massive moderation team. We've chosen to go a different route and detect whether people are human or not from the outset. So basically, to do verification that a user is human if they're going to post, if they're going to comment, if they're going to chat, and in ways where we're not storing people's personal data. So that's the main way in which we're aiming to sort of keep out some of the more nefarious users in social media. And then other things that we're doing is when someone posts news, you'll be able to post news, unlike on Facebook. On Gander, you'll be able to post news. However, that's going to come with a media bias and fact check alongside it so that users can actually see where someone's content is leaning and how well it's fact checked.
Oh, hi, it's Paul Harris, Ben. So is that what you mean when you say it's value-driven, because you're trying to think about it very differently? Maybe you can speak to that specific word that's used in your stuff. And the other thing is it easy in this environment to raise money for something like this? Or can you maybe talk a little bit about that part of how that raising money for a small company like yours? Maybe you can give some insight into that.
Yeah, sure. So as far as the values side of things, part of the things, something that we've seen over the last little bit is, we have laws in Canada. We have a charter in Canada. These laws are not respected on a lot of the major platforms, and so we aim to make sure that our local laws are enforced in Canada. And once we get to expanding, the same thing there. The other part of the values here is to make sure that this is accessible to people, to make sure that, we're doing things like I talked about, protecting users from misinformation, disinformation, from bots, trolls, etc. As far as the raising money, it's funny. When we started this out, we went down the VC route, starting to speak to early investors. And what we found was that finding alignment was difficult. And understandably, in a competitive market like social media, people are looking for that unicorn that's going to grow fast and what's the exit. And that's not really what we're doing here. We're a benefit company. We've incorporated in BC as a benefit company, so we're tied to a mission for public good and profit. That doesn't appeal to everybody, and not everybody is that kind of investor. And so we ultimately realized that the Canadians who are supporting us and who are interested in this and something different, those could be our best partners in this. And so that's why we've chosen to go with equity crowdfunding for now. And maybe social impact investment will happen down the line. Who knows?
And how many people have you had invest so far?
I think we're nearing, and don't quote me, but I think we're nearing like 2,200 people right now. The investments are anywhere from $255. We've seen people on average around $8,000 or $10,000 on average. I mean, there's many people at $255, and then a few at $35, $50, that kind of thing. Yeah.
So Ben, I assume that you're like other social media platforms, your kind of revenue will come from advertising. Is there other kind of ideas that you guys have to increase revenue, or?
You would assume wrong.
Oh, okay, well, that's good.
So we feel that part of the reason that this direction that social media has taken is specifically in order to drive ad revenue as its main mechanism of providing revenue. And that means more eyeballs. It means algorithms that keep people addicted to hate, to division, to dopamine, and all of that. And so we're taking a different tact. We're not pursuing advertising, certainly not as our main means of revenue. We're using a subscription model for additional features, for role-based usage of the platform. So if you're a business and you need multiple users, an administrator on there, you may pay for that kind of thing. And then this is, without boring everyone, a decentralized network. And which means that other users and organizations can have servers on this network in order to keep their own data, in order to manage their own users. And that is really interesting to us as a means of not only growth, but also as another way of generating revenue, where we would be able to work with governments, universities, down to NGOs, small businesses, ultimately, to provide people with what we're calling a wingspan, which is our social cloud service. So that will be another arm of revenue, and we're experimenting with some other things as well.
Okay, we're almost out of time, but just quickly, when do you have you launched? Have you soft launched? When do you hope to go public with it?
Yeah, so we're early in our beta right now. We've been the team has had it in their hands, and now we've expanded that to some friends and family. We're ironing out all the bugs. We literally just added the chat to it this past couple days, and there's 36,000 people who are all waiting to get on this platform. There's 10,000 who want a beta test. So we're starting that process in the new year of getting everyone on there to hopefully hit the 37,000 people on the platform for mid-end of March.
Okay, we have to leave it there. Ben, thank you very much for joining us. All the best in the new year with this.
Thank you very much. Have a great morning.
Ben Waldman is co-founder and CEO of Gander Social. When we come back, Paul Harris will take your questions on First Call. Time now for First Call, and we're actually going to have first email. It's from Charlie. Could you comment on Adobe? A couple of months ago, a market call guest forecast a target price of over $500 a share. An analyst at Goldman Sachs also projected that. Since then, the share price has tumbled. Where do you see the share price going? Paul?
Right. So Adobe is a company that we've owned. I think one of the issues with Adobe is that I think many people feel that AI is sort of going to eat their lunch or take away their business, which may be a fair comment. I mean, but I think the other thing that happened with Adobe, they emphasized AI in their business way too much and gave very high expectations about returns on AI for them, and I think that really hurt them. But this is a company that's sort of gone from $3.4 billion in 2020 in revenue to over $6 billion today. They bought back 10% of their shares so far. They continue to buy back their shares, and they've got top line revenue growth of 10 to 12%. So it's a company that's not growing as quickly as it was many years ago. AI will be important to them. I think they were. So I think this is a company that's buying back its shares, growing its revenue. It's really compounding at a very high level. So I think that that's very positive. I think that they overemphasized what AI is going to do for them. But I think that's kind of reflected in the stock. That's not going to be. It's a slow process. The other thing was that they were trying to do an acquisition of a company called FEMA. I can't remember the exact name of it, but it came public recently, and so that was kiboshed by the administration, which was the Biden administration, and I think in this administration would have probably gone through, but I think that they have. It's a great story. I think at these levels, I think it. I don't know about the $500 target, but I certainly think it'll start to go up over the next this year and next year, because I think there's some really good ability for it to compound and still grow its revenue.
All right, let's get a few more emails in before the end. This one's from Kevin. Please have your opinion on ARM Holdings stock. Should I buy, hold, or sell at current price? Thanks.
Well, so ARM is a semiconductor company, like many of the semiconductor companies. They're a design house. They don't build semiconductors. That's done to Taiwan Semi or something. But they have sort of benefited from the AI kind of move, and like Broadcom and certainly NVIDIA, but not to the level that they have. But I think that like a lot of these semiconductors, this is a really sweet spot for semiconductors. I think that we don't own ARM, but we own NVIDIA. But I think that NVIDIA. But I think that it's it's a great company. It was sold out from SoftBank. SoftBank still owns some of it, but it was sold. They brought it public again after they took it private. But I think that the sweet spot is for NVIDIA. Really, these companies are playing around the margin. I think Broadcom's the other one that's going to benefit a great deal. But it's a really well-run company. I think you want to own the biggest player that has the best chance of who's very strong and kind of controls the market right now, which is NVIDIA, right?
Okay, let's sneak in at least one more email. It's from Kip. What does Paul think of First Service Corp, FSV?
So First Service is a company we've held for a long time. They do two things. One, they do property management, and they have a franchise business. So in the franchise business, the names you probably recognize was probably California Closets or Paul Davis. So one of the things I like about this company, they've grown by acquisition as well as organically. They make all these tuck-in acquisitions. Although they're one of the biggest players on the property side, they're still relatively small because it's a mom and pop business, and so they can actually buy in these businesses. They're predominantly in the U.S., so you get that kind of growth. If you want to be in the U.S., you get a lot of growth from that side, where I think they're really growing, and there's more acquisitions to be made. The other thing is that there's a bit of an annuity because once they sign contracts, they tend to stay for, the contracts are for a couple of years or more, and there's an escalation clause on inflation on it. So you get sort of, increase in pricing, but you also get this annuity that stays with you. So I really like this company. It's a great time to buy it. It's never been cheap, but it's a great Canadian company.
All right, got to wrap it up there. Paul, thanks as always for joining us.
My pleasure.
Paul Harris with us on the street today. And the Open is up next. The markets will open a little more than 30 minutes from now. Have a great day.